Hello, everyone. Happy Friday to you guys. It's the last trading day of the week, and I'm so excited to welcome you back to another edition of the Forex Morning Mastery, which happens to be the last edition for the new week. Well, as usual, my name is Sheriff Daramola, and for the next 30 to 40 minutes, we are going to be taking another fresh new look at the financial market to see how participants in the market will be rounding off on their trading activities ahead of the weekend. And of course, we all know I do mention this countless of times here in this community how crucial and important last trading days are. As from a psychological perspective, majority or key players in the market who had made significant amount of profit of a particular direction through the course of the week are likely going to be rounding up on their positions, closing in some of their profits ahead of the weekend, and usually this reflects on the chart as price action doing a reversal from the prior leading price actions direction. And of course, we are going to be taking this into consideration while we review the current market conditions today. Well, so far this week, we have been monitoring three major assets, which includes the GBPUSD, the USOILSPOT, and of course, my favorite, the XAUUSD, popularly known as the gold spot. And in fact, we've done very well across board since the beginning of the week, and in fact the last 24 hours too was also quite interesting as we had significant profit on the US oil, and the same thing also happened on the XAUUSD. Only the GBPUSD was struggling to gain some traction, and of course we are going to be taking some time to look into that structure in a moment. For those of you who are joining us for the first time, you're highly welcome on board. I'm very excited to have you around with us this morning. And I know you will be asking what is it that we are doing here? Well, to simply put, as technical traders, we usually gather here on a daily basis to engage and do follow-ups and reviews of our current positions in preparations for both the London and New York session. And this usually kickstarts 8:05 a.m. UTC, 9:05 a.m. West African time. And I encourage you to stay tuned in so you don't miss out on any of the valuable ideas we will be deliberating on today. My aim here is to equip you with the knowledge and skills necessary to make informed trading decisions independently. The more time you spend with us in this community, the better you will become in comprehending our analytical approach and utilizing the information gathered in this community to enhance your own trading decisions and strategies. So once again, I do welcome you all on board. So with that being said here, we will be diving right into the business, and as usual, the first thing we normally do is to check on the economic calendar. And of course, for those of you who have been with me for a while now, you know how important this is, as these fundamental factors usually manifest on the chart in technical patterns and price movement. By monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this event. So right here on the economic calendar, we usually focus on high impactful events from the economic dockets that affects the assets on our watch list. And based on the asset we had for this week, we have been following the economic features from both the United States and the United Kingdom. Now today, this week has been immensely populated with a handful of high impactful event, which we have also followed through and have also incited major and significant move in price action throughout the week. But today, Friday, November 17th, it's quite scanty, as we only are looking forward to the retail sales data, which is coming in from the United Kingdom, and this actually happened about 3 hours ago. And in fact, we saw how the market had reacted to that event, as we saw how the data came in below expectations with a deficit of 0.3% as against the expected 0.3%. So it's a waffle compared to the expectation, but it's a little bit better than the previous data for the month of September. So we are going to be deliberating on the GBPUSD today to see how the current market structure is and how market participants had reacted to that event. And let's see how we can prepare ourselves as we round off trading activities for the week. Now, with that being said here, we shall be diving right into the business. But before I do, I have a couple of comments here. I can see Hiker's Diary and I can see Kelechi. Good morning to you guys, and glad to have you around with us this morning. So with that being said here, I also see a comment here from Gasho Asaf, who says interesting signals, and thanks a lot. Well, let me quickly state this very, very clearly. This is not a signal platform, so what we simply do here is to come together to see how the current market structure is, then understand the psychology behind price movement, and then use that to position ourselves ahead of the trading sessions today. Okay, but thank you very much for your compliment. I do appreciate that. So with that being said here, let's dive right into the chart. So the first asset we will be taking on this morning is going to be the USOILSPOT, where we had a tremendously bearish momentum, though we had a stop loss hit after taking advantage of a buy position yesterday. But thank goodness that we were able to recoup the loss we incurred, and in fact made a significant amount of profits upon it. Now, with that being said, let's run through how the week started for us in this community, for the sake of clarity and for the sake of those who missed out on the earlier session, so that we can all be on the same page and do have a background knowledge of where we are coming from. So at the beginning of the week, it was more of buying the USOILSPOT actually, after we identified price action confined within that range between the $76.75 level and the $76.35 area, giving us an insight into the indecision that gripped the market at the beginning of the week. Hold on a second, please. I do want to sort out something here. Okay. So, like I was saying earlier, we had a consolidation phase, which actually gave us an insight into the indecision at the beginning of the week. And coupled with that was this robust ascending trend line, which we spotted, which captured the series of higher lows since last week Wednesday. And for the fact that we have a range sitting above that ascending trend line, we were looking forward to the breakout, retest, or maybe of the resistant line to capitalize on the next move. So we had our buy stop order above the structure. We capitalized on that one, and price continued to move to the upside. We also added more positions at the breakout of the $77.50 area. We also had it at the $78.43, and we also had it some more at the $78.63 all the way to the upside before the bearish momentum here began during the second half of this week. And prior to yesterday's trading session, we begin to notice that despite the increasing bullish momentum we saw here on Monday and Tuesday, we saw how sellers continue to push price to the downside, giving us a reversal setup in the form of a head and shoulder pattern, as you will see right here. So we had the left shoulder, we had the head, and of course we had a transition into the right shoulder, where we had our neckline situated around the $78 area. And one of the things we agreed here on Tuesday, I think, was it more okay, Wednesday. On Wednesday was that we want to see price break down that neckline at the $78 area to validate the potency of that reversal pattern. And as you will see here, we have been selling since Wednesday's trading session, and of course during the live session yesterday we thought that buying momentum will resume again. Remember, we had this situation here where price action was trapped within the $76.50 level and of course the $76 area, and because of this range we saw here, we were positioning ourselves at either the breakout of the resistance line of this range to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. And if you remember vividly, I made mention that for those of us who are profitable so far this week, that we can have a buy stop order above the $76.50 level, but unfortunately that did not go well as we saw sellers come in, taking us out of that position in a loss. But thank goodness we were able to recoup the loss we made by capitalizing on the breakdown of the $76 area, and since that moment you see what an impulsive bearish impulse leg we saw here, pushing price all the way into that $72.35 area. And in fact, I already had my TP target hit as it was exactly at the 1212 1414 Fibonacci extension of the previous impulse leg. And for those of you who are still in a sell position at this point in time, I will suggest and recommend that you move your stop losses accordingly, secure this position or even close it, maybe as we begin to notice some interesting build up gradually unfold on the chart right now. So with a well secured position on the US oil spot, how do we intend to capitalize on the next move? Now, if we look at the nature of the economic situations, remember that we talked about the ongoing concerns about the slowdown in the Chinese economy, an economy which is known to be the world's top oil importer. And of course, when there is an issue with such economy like that, we expect that there will be reduced in demand of oil. And when there is reduction in demand, there is a tendency for price to crash, which is definitely what had happened throughout the course of this week. And however, the reduced fear of supply disruption in the Middle East is something I think could incite some buy pressure ahead of the weekend. And to top it all, the psychological expectations on last trading day of the week could incite some reversal patterns here. So we're going to be taking all this into consideration while we review the current market structure. So what we have today is a very, very simple setup. Hence, we'll need to be very careful and ensure that we are able to capitalize on the next move. Now, before I go into the details here, just for the benefit of doubt, I would like us to run through the higher time frame so that we can see things from an holistic standpoint on what is really going on in this market. Now, to do this, I would like to scale up into the 4 hours time frame. I don't want to go too far here because of my time. And let's look at what is going on at this juncture. So we saw here that since the midweek of the month of October, it was more or less of a bearish momentum, as you will see price action consistently and uniformly found lower highs in this market, leading to the breakdown of the key level we identified at the beginning of the week at the $80 mark. And now, if you look at the last impulsive move that's broke down the $80 mark, you will see it's just right here. And we saw how price retraced back to retest that zone to incite this downtrend continuation. Now, if we use our Fibonacci extension tool and run it through the impulsive move to project where the TP target of this downtrend situation will happen, you will see that the 127.2 and the 1414 area falls exactly around where price action tested the lowest point for this week, exactly around the $72.30 level. And since price tested that area, we begin to notice some buy pressure resume around that level. So for the fact that price respects these psychological expectations around the Fibonacci extension tool, for me, I think that we might likely be seeing a reversal setup come up today. Now, to give you a better perspective into this, let's scale back down into the 1 hour time frame. Now, on the 1 hour time frame, let's look at this very, very well. So I'm going to be zooming right into where our center of focus is going to be for today. Now, if we zoom the structure closely, I hope you can see my screen very, very well. So if you zoom this in, you will see that following the impulsive bearish leg that happened yesterday, bringing us into the zone, you will see that the New York session, the later part of the New York session, stroke the Asian session, revealed the level of indecision in this market. As you will see, price action appeared to be trapped within this range around the $73.35 level and the $72.35 area, emphasizing the level of indecision at this point in time. So you know how we do it in this community. When we identify such range, we want to exercise patience and wait for significant confirmations before we jump into any position. And usually when we identify a range like this, we either wait for price action to break down the support line to give us an opportunity to sell, or break out of the resistance line of that range to give us an opportunity to buy. Now, with the situation we have here and price action culminating at the 1414 extension of the Fibonacci retracement tool, I'm of the opinion that we are likely going to be seeing a reversal pattern. It may be a retracement of the impulsive leg, but I'm of the opinion that we are likely going to be seeing a reversal setup. And in that regard, I'm having a buy stop order sitting above the $73.35 area, hoping to capitalize on that next move. Now, there are two ways to which we can capitalize on this one. I usually mention this in this community. Now, for those of us who are profitable so far this week, in fact, we had tremendous profit this week, over it's close to 1,000 pips on the US oil if we consider the buy opportunity we took at the beginning of the week and then the sell opportunity we had in the last couple of days. Now, for those of us who are profitable this week, we can afford to leverage on some of the profit we had made. So what this simply means is that we are only going to be risking out of the profit we have made and not touching our real account. Now, for those of you who are profitable, you can have a buy stop order above the $73.35 level, and if it doesn't work, we know that we are only risking some of the profit we had made. However, if you are new with us and this is your first time taking a position with us, then you do not have a leverage to bank on. So I will encourage you to exercise patience, especially considering the fact that we are taking a counter trend opportunity on this one. So you want to wait for confirmations to happen, like break out of structure, price coming back to do a retest of that area before you want to be jumping into that buy position. Now, after setting that up now, I want to mention here that we want to be very, very careful with this buy position as soon as it moves in our favor. Remember, it's more or less considered to be a counter trend opportunity. And another thing here that will be our guide today is this descending trend line. Remember, this descending trend line has been supporting this bearish momentum since the midweek. And if price action remains below our descending trend line, you know that we want to be looking out for selling opportunities, of course. But now that we are taking this counter trend opportunity, and if price continue to move in our favor, move your stop losses accordingly. And especially if price gets into that descending trend line, kindly move all stop losses, secure and protect your positions, as we want to wait patiently to see how participants in the market will be reacting to that trend line. Now, there are two things that could happen here. Of course, we can either see continued selling pressure here, revealing that buyers are finding it difficult to break out of the descending trend line to incite a downtrend continuation. So that is one scenario that could happen as soon as price gets into that level. And the other situation that could happen is a significant breakout of structure, price coming back to retest, then the appearance of buy pressure here will welcome buying opportunity. But trust me, I will be with you in the comment section to give you updates if price action ever gets into this trend line today. Now, in as much as we're looking at a potential reversal setup on the US All Spot today, we cannot ignore the potentials that sellers can also come in here. Now, remember that we had a range identified earlier where we saw price confined within the $73.35 level and the $72.35 area. Please don't mind the irregularity of my rectangle here. So because we saw this range here, the potential of price action transitioning into a downtrend continuation pattern, maybe in the form of a bearish rectangle or a wedge, could incite price breaking down the $72.35 level to incite a downtrend move. So if I'm going to consider selling the US All Spot at all for today, I want to see price break through the $72.35 level, retest of structure to join the bearish move to the downside. So this is my view here on the US All Spot for today. It's a very, very simple setup. We just need to mark out these levels on our chart as this is our center of focus for today. So let's see where the breakout of structure will happen. Will it be above the resistance line or will it be below the support line? And let's see how this goes. So if you have any questions whatsoever as regards to this current setup or as regards to my explanation so far, feel free to let me know in the comment section below. So as usual, I will be taking the next 10 to 15 seconds off to see if there are any questions, after which we will move on to the next asset on our watch list. And you can as well use that time to mark out these levels on your chart, of course. All right, so I see a handful of compliments here. Kelechi, Jonah Aruna, Stephen Stewart, Sokoni Wango, I hope I pronounced your name correctly. MOD King Garage, good morning to you guys. Fred, Harry Tab, Naheem Likwat, Kelechi again, Mudavadi, good morning to you guys. I really do appreciate these compliments here. I can see Aka's Diary says here that it looks like a inverted flag pattern. Yes, a flag pattern and a bearish rectangular pattern are always fall within the same category, and in fact it could still transition into a pennant or a wedge. But most importantly, what we want to understand here is that we have a range, and of course this range here is going to be guiding our decisions for today. If price breaks down the support line, then we want to continue the downtrend scenario, and in fact if price breaks out of the resistance line, then we want to be looking out for buying opportunities, which is more or less seen as a counter trend move. So I think that's good on that one. Naim Likwat. Okay, Naim, we are going to be taking on gold. Please take your time. We will be there very soon. Stephen Stewart is asking, will you be shorting all your positions at the end of the market today? Well, it depends. In as much as I have rules, but I always try to be as dynamic as possible depending on the way the market closes for the week. If it closes in a promising setup that has a tendency of continuing the trend on next week, I'll leave it open and have my stop losses in place. So this is what I usually do. So depending on the assets anyways, for instance, oil usually come in the next week with some gaps, which makes it very unpredictable. But if you have a wide stop loss and you are looking at the market from a long-term perspective, then definitely you have enough breathing space to capture whatever gap that comes in at the beginning of the week. So I do hope I answered your question there, Stewart. And so with that being said, and in the absence of no other questions, I would like to move on to the next asset on our watch list. So the next asset on our watch list for today is the GBP USD. What an interesting situation we have here on the GBP USD. In fact, with the way things are going, remember yesterday we were looking at the potential that price could likely break out of that descending trend line, which actually did, to give us an insight into the potential that we are likely going to be seeing a reversal setup to inside the second wave of the bullish momentum that started this week. And in fact, on the GBPUSD, we've done very, very well this week. Remember, we scooped in over 1,300 pips on Tuesday. By the time Tuesday's trading session kickstart, we're already about 1,300 pips with over 7 positions running. And right now, we're likely going to see price drop further to the downside, maybe to continue the retracement move, or are there chances that price will continue to the upside? Well, if we look at the retail sales data that came in from the United Kingdom this morning, it came in at a deficit of 0.3%, which is way below expectations. But it's a little bit better than the previous month, which came in at minus 1.1%. So I'm still think that we're still looking at a positive situation as regards to that one. But the most important thing here is to see how the market participant had reacted to this event, and we are going to be taking a technical dissection of that current structure. Now, another thing that could also affect this pair is that could limit the potential of the bullish momentum here is the fact that majority are beginning to bet on the potential of the Bank of England cutting interest rate very, very soon. And this might likely limit the upward trajectory of this asset. But most importantly, we want to see how participants are reacting to the structure. So with that being said, let's run through the chart here. Now, at the beginning of the week, it was more of a consolidation phase. Remember, for those of you who are part of this session, at the beginning of the week, we saw how price action was initially confined within the 1.22375 and the 1.22225 level. And of course, at no point in time did we see price break down the support line, hereby negating any idea of considering selling at all at the beginning of the week. And in fact, what we saw was multiple breakout and retest of that resistant line of that range at the 1.22375. And for those of you who missed out on the first breakout, you can see how the market came back, retest the structures multiple times, and since that moment we have been buying the GBP USD. We had positions at multiple levels like the 1.22535. We had one more at the 1.22710. We also had more at the 1.22805, and finally the one that gave us that impulsive bullish leg was the 1.2300 area, as we rode that momentum all the way to the 1.25050 level. So it was a very, very profitable week for us on the GBP USD this week. And in fact, for those who made this profit, you could afford not to trade the GBP USD anymore this week. But it's okay, we kept on trading the GBP USD as we saw new opportunities unfold on the chart. And right here on Tuesday, on Wednesday's trading session, we begin to notice how buyers were finding it difficult to continue the momentum, as we saw a barrier around the 1.25050 level. And as soon as buyers got into this area, we saw how sellers came in to negate all the potentials by the buyers to break out of that structure. And one interesting thing about the transition of price action was that it evolved into a reversal pattern in the form of a double top structure, a beautiful reversal pattern to work with. And immediately we had our neckline marked out around the 1.248 area. And of course, you know what we did. We waited for the breakdown of the neckline to validate the reversal pattern. And since then, we rode the bearish momentum to the downside. In fact, if you had missed out on the first one, the market came back to retest structure, dropping the way all the way to the downside. So it has been a wonderful moment for us on the GBPUSD, we were able to scoop in over 150 pips on that bearish momentum before we begin to notice some buy pressure resume around the 1.23800 area yesterday. And one thing we said here yesterday is that if price action goes on to break out of the 1.241, we shall be buying the GBPUSD. And one interesting thing about the breakout of the 1.241 is the fact that it also shares a confluence with the descending trend line that was supporting that retracement move, as you will see here. So as soon as price broke out of the 1.241, it also broke out of that descending trend line to emphasize that the trend line may no longer have the capacity to continue to negate the bullish attempt. Now, something interesting is happening here. Now, you know, from a technical standpoint, whenever price action breaks down of a structure like this, let me extend this trend line a little further so that it can capture the future of price movement here. So you know, from a technical standpoint, whenever we notice price break out of a structure such as the trend line we have here, we do expect that price action may likely come back and retest the structure in anticipation of another wave of bullish momentum. And if you look at what has been going on here in the last 24 hours, price action appeared to continue to retest the structure. Now, the question going into the New York and London session today is that will this turn out to be the beginning of the second leg of that bullish momentum, or will the breakout of this descending trend line turn out to be a false breakout where price may break down the 1.238 to incite a downtrend scenario? Now, let's take a quick dissection of the higher time frame so that we can relate what we have here with what structure we have on the 4 hours time frame to make a well-defined trading decisions for today. Now, scaling up into the 4 hours time frame, you will see that for those of you who had watched my video on the GBPUSD, you will be familiar with the structure here. Now, the 4 hours time frame was basically the foundation upon which we built our decision for this week, where we saw this move right here. So I will be showing, which I'll be showing you in a moment. So I hope you can see my screen here. So the first thing we saw at the beginning of this week was this ascending trend line, and the most important one was this impulsive move we saw. And in fact, last week we saw price retrace back into this buy zone, which falls within the 61.8% of the impulsive leg that we saw here, giving us a sweet spot to join an uptrend continuation. And in fact, coupled with that was this confluence shared with that ascending trend line. So we capitalize on that bullish momentum all the way up into this area. Now, with the situation we have here, there are chances that price could continue to the downside here based on this current structure we have on the 4 hours time frame. Now, if we take into consideration this impulsive move that started this week, you will see that price appears to be going through a retracement move, which could be as a result of profit-taking activities in this market. And in fact, if we take a closer look at the structure, you will see that price appears to gradually transition into a reversal pattern in the form of a double top structure. Now, price dropped into the 1.24 area, a very strong psychological area. Remember, this level was initially a selling niche at the beginning of this month, and then prices are back into that structure after it was broken here on Tuesday. Now, price came back into the 1.24, and look at what happened. Price was unable to break out of the previous high, giving us something that looks like a double top structure. And of course, you know how we do it. Whenever we have a double top structure like this, we want to be marking out the neckline, which we will be using to validate the potency of that reversal pattern. Now we have our neckline interestingly lining up with that 1.2400 area, and of course you know what we are looking out for. A breakdown retest of the structure will confirm that truly we are going south, and if that happens, we are looking at a TP target around that ascending trend line, we spotted earlier. And in fact, if price action breaks down the ascending trend line, then this could incite more bearish momentum. And if price finds buy pressure around the ascending trend line, we look out for buying opportunity here. But pending the time this happens, our center of focus basically for today's trading session is around the 1.2400 area, where we want to see how market participants will be reacting to this level today to determine what our next line of action will be. So around this neckline now, let's see if the market will break down, retest the structure, and if it does, we are looking at a minimum of about 140 pips to catch here, depending on where the retracement phase ends and the beginning of the next phase of the bullish momentum. So at this point in time, our center of focus is around the 1.24 area. So let's scale down into the 1 hour time frame to see how market participant is actually reacting to the 1.2400 area. So if we zoom things into the current structure here, the buy position we took advantage of yesterday has been taken out in a loss. It's okay, there's no problem about that. We're still just playing around with the profit we had made so far this week. Okay, so now with the way things are going right now, price is, so remember we have this descending trend line since the beginning of Tuesday's trading session here. So it's going to be playing a major role in guiding our decisions today. So if price breaks down this descending trend line, then we know that we are back within the seller's territory, and look at how beautifully it shares a confluence with the support line here at the 1.238. So a breakdown of the 1.238 will be a beautiful opportunity for us to join a downtrend move. So let's see what happens here. If price breaks down, retest, we want to be joining the bearish momentum to the downside, and let's see how far this move is going to go. So anywhere below the 1.238, we look out for selling opportunities. But if price does not break down and continues to retest the descending trend line, then we are going to maintain a bullish bias here. So I will be looking forward to joining again at the break above of the 1.24100 area. So I maintain a bullish bias only if price action climbs back above the 1.241, then look out for more opportunities at the breakout of the 1.24560. But if price drops below the 1.238, this will take out all the buy positions within that zone. And then if price does some retest of structure, it will further confirm that we are going further south. So this is my view here on the GBPUSD. So basically, for today's trading session, our center of focus is between the 1.241 and the 1.238 area, which actually captures the 1.24 zone we identified on the 4 hours time frame. So if you have any questions whatsoever as regards to my explanations, or you need me to do some further clarifications to an area you really don't understand, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds off to see if there are any questions, while you also use that time to mark out these levels on your chart. Thank you very much. I saw your comment here, Ika's Diary. Thank you very much for the support. I really do appreciate that. All right. Okay, so in the absence of no questions, I do want to assume at this juncture that we are all on the same page. And in that regard, I will be moving on to the last and final asset on our watch list for today. But if you still have questions, don't worry, drop them. I will be checking the comment section from time to time. So the next asset on our watch list for today is my favorite, and that is the XAUUSD, which is popularly known as the gold spot. And in fact, on the gold spot, we've done very, very, very well since the beginning of this week. Remember that we have been buying this asset all the way to the upside as gold prices continue to maintain their upward trajectory throughout the course of this week. And of course, from a fundamental perspective, we can say that this is fueled by the growing expectations of an extended Federal Reserve pause. Remember, during the course of the week, there was um, um, this opinion that was all over the market, all over the news, that there is going to be interest rate cuts based on the data that is coming in from the United States. And of course, we begin to notice that there is a decline, in the US Treasury bond yields in the last couple of days now, which of course is undermining the US dollar factor across the major asset. And as a result of this, we can see the US dollar nosedive to the downside, though it's gained some traction during the midweek, but it failed woefully as we saw another wave of bullish momentum here. Now let's look at this structure from a technical standpoint and what really happened at the beginning of the week that made us feel comfortable buying the XAUUSD. Now at the beginning of the week, the first thing we observed was this ascending trend line. Remember, we saw this ascending trend line here, and which captured the higher lows from last week Friday. Then in addition to that ascending trend line was a beautiful range where we saw price confined within the $1,941.50 level and the 1,934 area, which emphasized the level of indecision going into the beginning of the week. And of course, with the situation here coupled with that ascending trend line, we were looking forward to the breakout of the 1,941-ish to join that bullish momentum. Of course, we saw that happen, triggering our first buy position for the week. And of course, remember that we also had multiple entries here as we continue to add more positions, had the breakout of the key level at the 1,945. And of course, you know how we treat our key levels in this community. As long as price remains above the key level, we continue to hold on to a bullish bias. Then we also added one more at the breakout of the 1,948, and as at Tuesday's trading session, we also added one more around the 1,959. So it was quite a very tremendously profitable week for us as we scooped in over 800 pips between Monday and Tuesday's trading session. Then right here on Wednesday, we acknowledged that buyers were losing that momentum around the 1,975 area, and we said if this leads to the breakdown of the 1,970, we will capitalize on that move. Well, for those of us who have been profitable, this is a very beautiful scenario for us to have capitalized on. So we took advantage of that one right there as we rode the momentum all the way to the downside. Now, during our live session yesterday, we noticed that sellers were finding it difficult to break through the 1,957 area, which was a red flag for us that price may likely continue the uptrend. And in addition to the fact that sellers were finding it difficult to break through the 1,957 was the fact that price was within an ascending channel, which we identified yesterday. So we connected a series of higher lows here, giving us the support line of the ascending channel, remember, and then we also connected the series of higher highs here, giving us the resistant line of the ascending channel. And for the fact that price action remained within the channel, we said we will continue to maintain a bullish bias. So as at our live session yesterday, price action was above the 1,964, and I made mention here that for those who missed out on the breakout of the 1,964, that we want to see price come back, retest the structure to give us an opportunity to join the uptrend move. And I do hope you took advantage of that move. And during our XAUUSD live window yesterday, during the New York session, you know we run a live window here on this platform. I made mention in the live window that we will be adding more buy positions to our existing trade. So we had levels such as the 1,970 marked out for new opportunities. So we had buy stop orders above those structures. We also had at the 1,975, and we also added one more at the $1,982.50 level. And not until this morning, for those of you who are with me on both my TradingView and Telegram platform, We also added another one at the breakout of the 1,988, giving us a minimum of 1, 2, 3, 4, 5 positions running in profit at this point in time. And I think we should be having over 500 pips from all. So I think, is it 500 or 350? Let me see. I think I meant, okay, 450, 500. Yes, exactly. It should be over 500 pips in profit from all the 5 positions we have here. And for those of you who took advantage of this opportunity with us, well done, and kudos to you for being on standby to capitalize on this move. Now, the next thing we want to be doing right here, you know, we do it in this community, especially for those of us who still have a buy position running. We obviously want to be moving our stop losses. Let's secure this current buy position, as anything could happen from this area. Remember, today is the last trading day of the week, and usually we expect some profit taking activities to happen depending on the sentiments in the market. So in this scenario here, I will be suggesting that we move all the stop losses for all the buy positions we have here into that area around the $1,982.50 level. Remember, while you are moving your stop losses, that you ensure you give enough breathing space for price action to move around, as we could see some volatility happen today. So let's keep this in mind. Today is the last trading day of the week, and there could be some fear in the market that will result in some selling pressure happen around this area. So now, with a well secured buy position at this juncture, what is going to be our plans for today? How do we intend to capitalize on the next move? Well, if we look at this structure closely, you will see that since the later part of the New York session and the Asian session this morning, we saw how price action had consolidated, in fact confined within the 1,988 and the $1,982.50 level, to emphasize the level of indecision going on at this point in time. And of course, you know how we do it in this community. When price action falls into such a range, we want to exercise patience and wait for a significant signal to give us an opportunity to trade. And what is the signal we usually look out for? Well, it's either price breaks out of the resistance line to give us an opportunity to buy, or price breaks down the support line to give us an opportunity to sell. So basically, our center of focus for today is between the 1,988 and the $1,982.50 level. Now, with the situation we have at this juncture, I already have a buy position, and I hope you had a buy position there triggered already. But for those of us who missed out on this opportunity, let's see if the market will come back and retest the structure to incite an uptrend continuation. Now, another thing I would like to call our attention to is the fact that price action is currently oscillating around the resistance line of that ascending channel we spotted here during our live session yesterday. And in fact, it has broken out of the ascending trend, out of the resistance line, and we can see price maintain its momentum above that line. Now, if price remains above that line, we shall feel comfortable in this buy position and look out for new opportunities to capitalize on. And you trust me, I will be with you in the comment section of both my TradingView Telegram platform and in fact during the XAUUSD live window today, to give you new insights or new setups that we can take advantage of as we continue to monitor price action. So on this one, we maintain a bullish bias on the XAUUSD. However, in as much as we're looking out for buying opportunities here, there are chances that we could have a retracement happen in this market. Remember that price action has been within the ascending channel since the beginning of the week. So if we want to give a visual representation of what it looks like, you can see price drop down, climb, find new highs, higher lows, higher highs, higher lows, higher highs, and there's a chance that price could do some higher lows again before another higher highs happen. So it is a possibility that could happen today. Now, if this is going to be happening, how do we want to know that it's truly going to be happening, so that for those of us who can take counter trend opportunities, or for those of us who are scalpers can actually take advantage of that move? Well, for us to capitalize on that one, we want to see price break down that trend line. So if price breaks down the trend line like this and it continues to find it difficult to climb back above that trend line, then lower highs and lower lows on our lower time frame will give us an opportunity to sell, and then we can add more positions at the breakdown retest of the $1,982.50 level. Now, if price gets into the support line of this ascending trend line, let's ensure that we remove all stop losses, secure the current sell position, and wait to see how market participant will be reacting to that trend line to decide if we are going to be adding more sell positions at the breakdown retest of the trend line, or get ready for another wave of bullish momentum at the appearance of a reversal pattern there. It will come in the form of a head and shoulder. It will come in the form of a double bottom structure, whichever case it may be. But personally, if you would ask me, I doubt if price will come that far. But if it does, we want to be on standby to capitalize on that move. So these are my views here on the XAUUSD for today. So basically, our center of focus is between the 1,988 and of course the $1,982.50 level. And don't forget to complement this range with that ascending trend line we spotted here, as it's going to be playing a major role in determining the direction of price action today. So this is my view here. If you have any questions whatsoever, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds off to see if there are any questions whatsoever while I round off on this one. And then I would like to say here that if you have found this video helpful and useful in making your independent trading decisions for today's trading session, I'll really appreciate your support by giving the video a thumbs up. Your likes are very valuable to me, and in fact, it also helps the algorithm promote the video to a wider audience of traders who may find this content beneficial to them too, and at the same time help grow the community. So with that being said here, let's see what we have here. Do we have any questions? And thank you very much for liking. For those who had liked, thank you very much. I really appreciate. And for those who are yet to like, please do. It doesn't cost anything. Thank you very much as you do so. So let's see if we have any questions before we round off for today's trading session. All right, so I see your comment here, Ika's Diary. Well done to you. You said here that you can see a higher low along that ascending trend line. Well, I want to assume you are talking about this ascending trend line here, right? And if that is the case, well, I'm trying to see where you say there is a higher low here. Okay, if we look at the previous high here, we have one, and then we have another one here. But as you will see, price action has broken out of the higher low here, which further emphasizes that buyers are getting stronger by the hour. And for me personally, I'm of the opinion that as long as price still remains above that ascending trend line, which happens to be the resistant line of that ascended channel we identified yesterday, I will continue to hold on to a bullish bias here. Like I told you, I already have a buy stop order triggered, and I do hope you had a trigger. And for those of us who missed out on that one, let's wait for a retest of structure to happen, then we can join that move. But the only condition here that will make us sell is if price will drop below this trend line like this, retest of structure confirming that buyers are finding it difficult to climb back above that trend line. Then at this point we can start considering selling if you are a counter trend trader or a scalper at that juncture. So thank you very much for the observation, Ika's Diary, and I do hope my explanations is quite clear. And I can see, okay, you're welcome, Steven Stewart. Thank you very much. I hope you've liked the comment, liked the video, And thank you very much as you do so. So I can see a question here from Kelechi. How are you doing, Kelechi? Kelechi says that, do you draw your lines at the tip of the wick or the body of the candle, and what informs your spotting key levels? Do you have a content on how to spot key level? Very beautiful question, Kelechi. And in fact, you must be new with us, I'm very sure, because we've talked about this several times. And first of all, whenever I draw my trend lines, I use my line chart to draw my trend line, as it gives me a specific point of contact. So I hope I answered your question on that one. Then secondly, you're asking, how do we identify key levels? To identify key levels, I would advise you to watch my videos I usually share during the course of the weekend. So my weekend videos usually entails how we identify key levels and what was the idea or rationale behind this identification. So for this week's Forex Morning Mastery, the video for the last weekend is right in the description box of this current video. If you could check them out, the more of this video you watch, you get to understand how to use price action to identify this key level. So I encourage you to watch those videos, and I think that's all the question you've asked here. So do you have a content? Okay, sure, I think I've answered that too as well. So please check it out below. All right, Aka's Diary and Sadon Amid, good morning to you. Glad to have you around. I guess this is your first time with us. Please let us know in the comment section. Hi, any news for today to effect on gold? Well, at the moment, not really. We do not have. The only high impactful event we saw today was the retail sales data, which had already happened from the United Kingdom's economic docket. And besides this, we do not have. So we are relying basically on our technical skills to position ourselves for the next move. So we already have structures marked out, and that will be what we will be using to guide our decisions going forward. So in the absence of no questions, I want to assume that we are all on the same page. You are welcome, Kelechi. In that regard, I just want to emphasize here that I dropped the link to the XAUUSD live window in the comment section. It is pinned at the top of the comment section. So you do want to click on that link. Click on the notify me button so you can get notified as soon as we come online. And for those of us who are new with us and don't know what the XAUUSD live window is, well, the XAUUSD live window is basically a platform that was born out of popular demand from the community here. So on the XAUUSD live window, we usually come together to monitor real-time price action on the XAUUSD, see how we anticipate new moves, see how we protect our positions, and of course manage our trade through the New York session. So it usually kickstarts 5-10 minutes into the New York session, and it lasts about 6 to 7 hours depending on how the day goes by. So I will look forward to seeing you right there so that we can make an event out of it, and in fact, if possible, replicate our feat today too as well. What's the next level after 1,988? We don't know yet. Be part of the XAUUSD live window, be part of the my Telegram channel, and definitely I will be giving you an update on that one. So for now, we don't know. We are still floating. When new structures come up, I will definitely give you an update on those platforms. So it's on this note, I want to call it a day here. It has been a wonderful week with us in this community. We were immensely profitable. This is like a one-off week for us, and in fact, I really appreciate every single moment we had together in this community. So since the beginning of the week, we have been monitoring 3 major assets, which includes the USOILSPOT, the GBPUSD, and of course the USOILSPOT, all of which we were able to gain some significant amount of profit on this asset. And once again, congratulations to everyone who was part of this profitable journey. So let's see what today is going to be like. Are we going to be able to replicate what we've been doing since the beginning of the week? Well, let's see how that will play out. And for those of you who are joining us for the first time, I do hope you are able to gain 1 or 2 things from what we discussed here today. And in fact, I look forward to seeing more of you, as the more time you spend with us, the better you get to understand our analytical approach and eventually be able to use the information you gather here to make your own independent trading decisions. So on this note, I want to wish us all the best of luck today. I also want to wish you a wonderful weekend. And that reminds me, if you had not subscribed yet, please do, as if you subscribe, you get to get notifications as soon as I upload new videos. And for this weekend, we are going to be planning again for the next week, and I will be dropping my weekend videos as from tomorrow. So you don't want to be missing out on that one. So on this note, I wish us all the best of luck, a wonderful weekend to you, and looking forward to seeing you again on Monday morning as we come here again to look at the market from another fresh new perspective. So on this note, I wish us all the best of luck and do have a wonderful day. Bye-bye.